Welcome everyone to HueFin News. Today is March 19, 2019. This is the home of the 2-minute price prediction, as well as giving you all the news according to the charts. We're going to talk about to see whether or not Jerome Powell is going to be able to cause a breakout to occur in the three major indices, the NASDAQ, the S&P 500, as well as the Dow. Tomorrow is going to be the time to where they're going to be doing their announcement on whether or not they're going to increase the interest rates, and as well as give the forecast as to going forward for the rest of 2019, which can be a catalyst for the major financial markets to break out of this consolidational range we've been in ever since the ending of 2018, going into this beginning half of the first quarter of 2019. So that's what we're going to talk about today. Okay, we're going to talk about to see if Jerome Powell has enough momentum to break to the upside of these three major indices over here on the United States. Okay, so before I get started in that, we definitely want to make sure that if you do appreciate this content, make sure that you all go ahead and subscribe, like, and share this video if you do appreciate it. We definitely would like to see how the market is going to be trading in the future, and you're definitely here looking at the simplistics of how to read price charts. Okay, we're not here to confuse you, and we're definitely here not to waste your time. So definitely we appreciate you all coming in. Let's go ahead and get started in our video for today. Now, this was an article posted on CNBC website on Friday, March 15th, with the title, "The Fed is to make important forecasts as stocks on a precipice of breaking out." The Fed's meeting is a big deal for markets in the coming week, and it is widely expected. See, this is where it causes concern, where you see articles like this and it speaks to widely expected. So everyone is already tipping the scale to one certain direction, and it's widely expected to send a message that investors in both bonds and stocks could find bullish. So this is the way that the scales are tipping. Everyone is being bullish regarding to Jerome Powell's coming out with his Fed minutes tomorrow. Now, the Fed minutes is supposed to come out tomorrow at 2 p.m. Okay, and this is consensus, is that it's going to be around 2.375% for the federal funds rate. Okay, so look for that to come out tomorrow at 2. And then definitely the market is going to react to it. So just be prepared for the market to give us a little bit more volatility than what we've seen for the first 2 days of this week. But analysts in both markets say the Fed's message has been well telegraphed, and the market response could be tepid or even a sell the news reaction. So already this article is trying to be biased, trying to cause some confusion as to whether or not we will see a increase to the upside or a decrease to the downside. But guess what? The price chart already tells you the ideas of everyone else, and we will look at that after the conclusion of this article. The key for both markets will be what the economic data shows. After a series of weak reports, Thursday regional Philadelphia Fed survey and PMI data Friday on manufacturing and the services sectors will all be important. Existing home sales will also be released this coming week. The first quarter has not exactly been a hallelujah quarter, and the Fed has to acknowledge that, said Diane Swank, the chief economist at Grant Thornton. The Fed is expected to hold interest rates steady, but it is also expected to issue a new forecast. So this is what's going to move the market right here. This new forecast is what the market is going to base its price movement off of. So the new forecast is going to be one with an expectation of having fewer rate hikes and a slower economy. The Fed also is likely to announce the end of its operation to unwind its balance sheet, meaning that instead of them buying bonds, federal notes, they are selling what they have on their balance sheets back into the market. So this could also be a positive catalyst for the financial market as well, once they announce that they're going to end it. Now the question is when will they do it? The economists are divided on which month this year it will actually end the program. Now this is what had happened in the past week for the financial markets. Stocks surged in the past week with the best performance since November of 2018 for the S&P 500, which was up almost 3%. Now, at the same time, Treasury yields, which move opposite price, they continue to fall. So the 10-year Treasury interest rate now stands at 2.6% Friday, the lowest it's been since June 4th, 2018. And the 2-year is at 2.43 right now. The fact that both markets are rising at the same time is somewhat unusual, and at some point the trend could break in favor of one market versus the other. An easier Federal Reserve, meaning one less inclined to drive up rates, is viewed as a positive for stocks, because higher interest rates can slow the economy and sending borrowing costs higher for companies and investors, which will in turn cause a lot of corporate debt to go underwater, and you might even see some businesses go through bankruptcy. This could be an interesting week, said Art Hogan. This is what he's trying to say. He said it should be a positive for stocks if the Fed reduces its forecast for rate hikes and delivers on its expectations. So this is what the market is going to be looking for in Jerome Powell's speech tomorrow. Everyone's going to be paying very, very close attention to the words that he speaks, and they're going to dissect every single word that comes out of his mouth as to what is going to be the plan going forward for 2019, which is one of the main reasons why you can expect some volatility to go on tomorrow afternoon, even into Thursday. Okay, this is the meeting where we get more clarity on the balance sheet reduction. Okay, so these are the things that the Fed needs to talk about. They're worried about them unwinding or selling their bonds that's on their balance sheets back into the market. They're worried about that. They're worried about how many interest rates will occur in 2019. And they're also worried about what's going to go on past 2019 as well. Both of these things would be an affirmation of where things are right now. It's also technical. Where we close, talking about the S&P 500 puts us on a precipice of having a breakout. So once we look at the price chart, you will literally see the market holding its breath for tomorrow's announcement. Paul Christopher, he's a Wells Fargo Investment Institute Chief International Investment Strategist, said the stock market could actually have little reaction to the Fed because Fed officials have been very dovish, meaning very weak in public comments. It could be neutral or perhaps even negative. What more can they say? You might see some people selling the fact, he said. Christopher said he sees the market as stretched and it could be a sell-off moment, but then there could be a buying opportunity as well. So what he's trying to say is that once Jerome Powell comes out with his speech tomorrow going into Thursday, you might see a sell-off. Kind of like what we've seen at the ending of 2018, where we've seen the market drop 15-20%, and everyone thought that we were entering a correction and even bear market territory, when in fact where we are today, that time was a buying opportunity for majority of the stocks in this space. So that's what he's trying to insinuate. That's what he's trying to point out, that this could actually be a buying opportunity if we in fact see these stocks sell off. We think stocks have to start to feel better about the economy first. Adding a trade deal with China could be a positive, and seeing that FedEx is down 10.55%. They just came out with their earnings and it wasn't positive. They are definitely seeing the economy slowing globally. So again, that is something else that is going to weigh on the markets tomorrow and even towards the ending of this week. Okay, so I'm just going to go ahead and leave this article in the link to this article in the description of our video, just in case you want to go ahead and read all of it. I'm really not in tune with what everyone has to say on their opinion, because if you already know, we are following the price chart. We want to see if what the majority of all of the market participants are placing their bets on, and looking at these three indices, the NASDAQ, the S&P 500, as well as the Dow, okay, you can tell on a monthly time frame, okay, we are at a crossroads. Perfect timing to see everyone else hold their breath, because they literally are waiting for Jerome Powell to give us some inclination to cause these markets to continue to move to all-time highs. You can see right here on the NASDAQ, the monthly price chart coming right back towards that 7,400 point area, which came in as support during the month of September. And now we need to see a positive catalyst come through the market in order to see the NASDAQ move higher and even possibly make all-time highs once again. Same thing with the S&P 500. You can tell right here that the market in the S&P 500 is at a crossroads. We came up here to this particular price, 2850, during the month of July 2018, as well as January and February of the same year. We are now at a crossroads for the S&P 500 too. Taking a look at the Dow, we are at a crossroads again. The market participants are waiting for a boost to break to the upside of these resistance areas that is hitting the market on these three indices. I'm telling you that right now. So the market, especially in the Dow, is waiting for just some hint, some inclination that the overall market wants to continue to move higher. And I can tell you from the last 2 months that all of these three indices are still indicating their ability to move higher. But you have to preface what I just said regarding how high these indices will go. And I only say that because we are trading on each and every one of these indices right around areas of resistance that it could not break above previously in the background of this chart. Okay. Now the NASDAQ is pretty strong right now. The S&P 500 as well is trading pretty strong. The only thing that is really weak will be the Dow. Okay, you can tell quite nicely that we have seen multiple monthly price bars to where we couldn't break above this resistance line, which is around 26,200 points. Okay, now the current move in the market, I could tell you the majority of the participants in this particular financial space are feeling quite confident into the market moving to the upside. Now, if we do see a sell the news type of day with Jerome Powell coming out with his information, we can see the market move down initially, which is why we have support areas in this particular chart. So if we have a sell the news fact come into the market for the United States stock markets, the NASDAQ can fall back down to 7,200 points or even 7,000. That will be okay in order for us to see a progressive movement higher going throughout the rest of 2019. Same thing for the S&P 500. If we get a sell the news tomorrow, 2,800 points will be fine. Maybe even 2,750 going forward. If we see strength come in at those two prices for the S&P 500, then later on in 2019, we will see continuation of higher prices. Okay. Taking a look at the Dow. If we get another sell the news to occur in the market, the Dow can still hold that 25,500 point area, even 25,000 points, and we will still see higher prices going throughout 2019. So those are the support areas that everyone needs to pay attention to if we get a sell the news atmosphere tomorrow in this space, or even on Thursday. Okay, so I have already conditioned what the market can do in order for us to see higher prices later on in 2019. Now, if we get a sell the news fact tomorrow and the market comes all the way back down within this consolidational trading area, then we will continue to move a lot lower throughout 2019. Okay, so those are the things you need to be on the lookout for. We are giving you all the news according to the charts, how it's going to play out before it actually happens, and that is literally how it's going to play out going forward so far. Okay, so overall, the market participants are betting for these three indices to continue to move to the upside. It might be a sell the news mentality though, so you might see a dip in the space, But as long as we hold those support areas, which was identified earlier in this video, we will continue to see higher prices throughout 2019. Okay, so we're telling you that right now. Give us your thoughts. Give us your opinion. Do you think Jerome Powell is going to have enough wording in his speech tomorrow that will make all of the market participants satisfied and allow a breakout to occur? That is what we want to know. So give us your thoughts. Give us your opinions as to what you think tomorrow will be. Do you think it's going to be an excellent day to where we will see the market move substantially higher in price? Or do you think it will be a sell the news atmosphere to where we'll see these indices moving to the downside? So give us your thoughts, give us your opinion as to what you think tomorrow will be. We definitely appreciate you all taking out the opportunity out to watch this video. Matter of fact, go ahead and check out our website, HueFinancial.com. We have more articles, more videos placed there on our website because we are all here to give you the news according to the charts. Make sure you all maintain your profitability, and I will talk to you all later.